Star, copies all. Go ahead. Message to observer. Alpha 3 rounds, AT delay in effect. 3 guns. Bravo 2 rounds, 2 guns, smoke on effect.
What is going on, everyone? How's it going? It is almost time for the JPOW reveal. What's he going to say? What's he going to do? What effect is it going to have on the markets? Good or bad, bull, bear? We all don't know. There's one thing we are certain for, though. We're going to play it as it lies. There's not going to be any double dribble. I don't want to see any half-court violations. So I've got puts ready to go. I don't necessarily think we are going to crash, but that's what I'm going to stick with in terms of having my order form ready to go. And I can switch to calls very quickly if that's going to happen. No icing. I like it. Little hockey reference. Didn't they do away with icing, or is that did I mishear that? All right, so 461.14. We had a little red candle come on down, immediately was wicked up, and now we're hovering right above S1. We've been kind of bouncing off S1 all morning, all day. I do think the FOMC, the thing on the thing starts 2:30 Central, 3:30 Eastern Time. Or I'm sorry, 1:30 Central, 2:30 Eastern Time. So we've got about 30 minutes, but they are going to start releasing some data here in a few minutes here. So we'll see how this starts to affect the market. I will be streaming it here, and I'll show you how that's going to look right there. So be on the lookout for that. I'll be having that ready to go when the time actually comes along. A little bit loud, need to adjust the volume on that, but 461.16, not much going on. And I was watching the puts. The November 5th 4600 puts is what I was looking at. When they were up here, and like we had this downturn, when they were here, they're about $12.80 a piece. When they tanked all the way to the bottom, they were like $13.40, which is only like a 3 or 4% gain. So right now the juice is not quite worth the squeeze. The premiums aren't moving all that much, so we need the move to happen. We need things to start shaking and baking for us to really start to gain some money. I'm not doing zero DTs. I'm just not going to do it, especially with the volatility come along and things like this happening, big wick ups. I'm not going to have 30%, 40% loss in a second. So, been a long time for me in this Discord and trading. Nice, 80. Thanks for being here. Appreciate it. What's up, Killhouse? How you doing, buddy? Yeah, I think ATVI was involved in a sexual harassment lawsuit. I think it was, and that's why they're down big, something like that. I'm doing pretty good. Doing pretty good. Ready to make a little money. All right, have a little green candle right there. I'm watching this when they do start talking. I will bring it on here right now. I need to see if I can get my mixer right. Just bear with me 1 second here. I'm going to get this to a manageable, I'm going to get the FOMC to a manageable volume. Man, look at that red. Oh, man, look at these candles. Holy moly. Crazy, crazy volume. Crazy volume. Man, big red followed by big green way on up. Yeah, that's fine. It's at the end of the day. Look at this. Oh, man. Man, big green coming up from 460.85 on up to 461.58. It's a $1.50 move and still climbing. QQQ is now green as well. The discounted rate remains, man, look at this. Wow, 461.83. Crazy stuff. Right up to R2, 461.98. Bounces right off of it. Talk about some volatility. Yeah, 10 billion a month. We already knew that. Voted 11-1 to fund rate action. Cool, leaves unchanged 0.25%. So they're not changing the rates, which is bullish. And man, this thing is going smoking all the way up, right past R2, all the way up to R3. And thank you very much for that. Man, look at that green candle. Look what's Tech doing. Tech doing the same thing. VIX now is dropping off the cliff to 1570. And the thing is wicked out now. R3, 462.59 wicked out. What are the bonds doing? Bonds right now are still pretty much unchanged. Now selling off. Wow. Yep. 460 put on a 0 DTE went down 70% on that. Yeah. Crazy, crazy stuff. Have I seen anything like this? Yeah. I mean, the past 2 years, yeah, this stuff like this pops in every now and then, but it's crazy, crazy stuff. This is why this is why I didn't take a position into it, because that is nuts. Nuts. 460.59. It checked up briefly on R2, blasted up, now rejected R3. It actually came within a few cents of R3, and I like that. But now we've got this big old Shrek candle that is just blasted right through everything we've seen today. Yep, big old wick too. Big old wick. Bring it right back down into the range. Look at that, man. You could floss your teeth with that. You could floss everybody's teeth with that thing. Bitcoin falls 4.3% as people probably using that as a hedge, if I had to guess. Yep, everything is status quo. Rate remains unchanged, and they're going to be tapering as expected. Oh, here we go. Giddy up. New T-shirt idea. Well, thank you, Prosty. That means a lot to me. I'm glad you're able to get something out of that firm. No positions yet, Brandon. No, no positions yet. Tech starting to get bought up again. A lot of crazy volatility. 461.98, continuing to climb. All right, so who won the poll? Who won the poll so far, at least? 28 of you say big green. 97 of you say big red. I think the greens have it, at least for now. It very well. Let's see how it goes into. I gave you until 2 o'clock my time, so I gave you an hour to really fall into the trend here. So let's see what happens. Who wins overall? Right now, the greens definitely have it. No positions right now, but man, this thing got on the Saturn V rocket and hit the throttle to full. What's the rest of tech doing? Is there any red across the board right now? And I do not think so. I think everything is just, man. Boom, right up to R3 again. So 460.85 to 462. It's about $1.60 something cent move. That's public math. Don't check me on that. NQ explosion. Everything just went crazy. All that for a 0.25 move in SPY. Yep. Why is there a pop in volume right now? Because everyone was waiting on their had their mouse ready to buy this stuff up if anything was good, and nothing was bad. Everything's good to go. Tapering as usual, and bam, big buy up. So glad my going all in days are behind me. That one would have sucked really bad. There you go. Well, let me scale out a little bit. That green candle's getting a little big. Yep, so we got 24 minutes till the FOMC starts. Now there's somebody talking about bank and some or another about, you are Americans, you need to work your 40 hours a week and pay your taxes so we can buy our yachts. And I've got it muted. I don't really know what they're saying. I'm loosely translating here, so don't hold me to that. But yeah, SPY strike what I'm liking. Let me take a look here. There's a little red right off R3. November 5th contracts at this point in time. Now this could change aggressively because of the way this thing's shaking. Let's do, man, big volume. I like it. 464s, and I'm going to go with the 460s. 464s, 460s. Got a 30% on that. Nice. Red candle on the tech. A lot of top wicks here, right up to R3. A big sell-off on the bonds here, just getting roasted all the way down. XLF, big green candle. 20% on some calls, and I'm out. Nice. All right, so that's the 3 minute. Let's go over to the 5. There's what the 5 looks like. Here's what the 15 looks like. Massive needle just right at the top after a long period of consolidation since yesterday morning. We've been consolidating pretty much in this range. And then there you go. There you go. Because of the rates. It's all about the rates. They're not changing the rates. That's what it comes down to. If they would have said they were adjusting the rates in November, we would be at 430 right now. But they're not touching the rates, and that's the whole thing because that's what's going to affect your mortgages. That's what's going to affect loans. That's what's going to affect bank-to-bank money transfers, and that controls the market. So do I know indicators when there's crazy volatility? For the most part, yeah. Because no indicator is going to hold up to this type of movement. So yeah, yeah. And not when you mean indicators, I mean the EMAs and stuff like that. It's just going to blast right on through it. All right, so the afternoon range now 462.72 to 460.85, and that's just SPY conveniently and sneakily forming new all-time highs on us. I think we popped out to 462, 72 on that one. R2 and R3 on the money. Yeah, good stuff. Because he's going to come out and then what if he says, hey, the rates may not change in November, but when do they change? Or when do they anticipate changing? Or if he says anything other than, hey, I'm going to leave it up to, I'll allow the rate change to be negotiated at every FOMC, then that'll change things. Because then we're going to do this every month. If he says we're not changing the rates, it's signed, it's passed, we're not going to change it till November, whatever, or next year or April, whatever it is, But if he comes out and says, hey, we're going to renegotiate this every month, that could change things. It's all about interpretation. What am I looking for to make a play? They did, and then, I know we were talking about transitory. They did actually come out today and say, or the article I read today, for example, they said that they're backing away from the word transitory because they're admitting that it's tone deaf to use that word transitory, because it's not transitory, obviously, and which once again, I think everybody and their mom saw that. Man, look at this, coming off R3 down through R2. Uh, Tech coming on back down, eating it up. Nope, no position right now, Zach. No position. Nice, nice. 14% on some scalps. Nice. Watch this thing close dead even. That'd be hilarious. After all this, dead even. What is that? 42 million premium. When do we know to go long or short? I'm going to let this thing fizzle out here and just get a trend. And maybe that doesn't come till tomorrow. But this thing is, if it pops up to R3 again, I'll start looking at puts. Maybe we'll reject R3 again. That's a pretty high level, 462.59. It's a pretty high level. It's already rejected it once now off some pretty significant volume. So if we try to creep on up there again, I'll look at taking some puts. Or if we come on down, I don't know. We'll see. It'll make itself obvious when it happens. I map the S1, the S and R levels every pre-market before the day starts. And at all-time highs here, I don't have any volume history to go off of, so I have to use some calculations. I have to use some data that's available to us in the future. Future data. That what I mean by that is order flow. Boom. All right. Yeah, look at that. 1.59 on that. Futures now. Still doing this thing. And I'm back right and smack down the range for the NASDAQ. SPY is coming on down a little bit. I wish, John. I wish. That's for our tier 4 subscribers. I project levels beyond all-time highs using Fibonacci. Fibonacci is one way. I would definitely make sure you're utilizing other aspects, because Fibonacci is great, but it's still guesswork. It's still an indicator that's not based on actual data. So I do use Fibonacci for long time stuff just to give me a good example of where to start. But again, it's still an indicator based on a formula, not on actual data. I like to use order flow, the gamma flow, all that stuff in the options chain that's going to tell me, all right, well, this is a level that I'm actually seeing data on. And that's why I'm still able to form levels at all-time highs relatively accurately. All right, rolling back up here. A lot of strength throughout the market here. SPY still climbing. You're welcome. You're welcome. I've never tried trading the BTC futures now. It's funny how their strategy would work on them. Let me see the prior. Sorry. Oh yeah, yeah. As long as it's volume, as long as there's volume, absolutely this system will work. That's the great thing about it, is that it's all based on volume. And yeah, crypto does have volume. So, and from what I've seen from a couple of people that do trade crypto, obviously I don't know about crypto futures, but this works as well. Yep, bank stocks are spiking. Those rates, baby. Get them rates. Give me the mortgages. Num 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 num. Economy loves mortgages. What do you use to get news? I primarily use Bloomberg. They're fantastic. I have some Ford. WDog, I got some Ford. $11 till the JPOW comes online here. Yeah, came up to what? 1.602. Rates are spiking. So more of the same we've been seeing. Alrighty. I do pay for it. Yeah, I do pay for Bloomberg subscription. What's your login? Nope, not the terminal, just the Bloomberg. I do. I'd like to get a terminal one day, though. All right, look at these climbing right on back up. QQQ is climbing as well. VIX is dropping. Let's see if we get another bounce off 1556. TLT is starting to climb back up here. XLF is up there. Looking spicy up here for sure. I'm going to pre-type an entry in the OM plays. I'm getting there. Getting there. Let's see. A lot of top wicks. QQQ now. Trying to do the thing. Why we don't trade zero DTEs? Yeah, for sure. Big green on Qs. I'll be looking for a confirmed rejection of R3 again and play that if it comes down. If not, we'll get off of that. That's my thesis going into this. No trades just yet. I'm looking at some puts on the rejection of R3. Michael, that sounds like Florida. That sounds like Florida. Yep, that'll work. 11.5, 460 SPY or the 4600 puts on SPX. Those are the trades I'm looking at. I'll be playing the SPX, but if you want to, you can play the SPY. So yep, IV spike. That's exactly what it was. No, I'm not talking smack about Florida. I just always laugh at all the headlines I see come out of that place. I think this particular action, unless you are well versed in strangles, I would avoid those. If you have experience, do your thing. But all right, here we go. Right up to R3. If I get a confirmation, I will jump into some puts here. But let's see. QQQ now is still climbing up here. SPY is higher than where Q was, so that's why I'm a little cautious. I don't want Q to blast up the top, push SPY even higher, maybe to R4, and I'm end up holding the bag. First wick off R3. VIX now is coming on down. I'd like to see a bounce off 1556. TLT climbing up here, doing a little different thing. NASDAQ still climbing. Futures there. Everything else is climbing pretty aggressively here. SPY is there. Diminishing volume though. Yep. But I guess it's more maintaining volume. It's not necessarily dropping off. It's maintaining. But still something to be aware of. Clean rejection right off R3. There's some more green on the Qs. VIX now coming on down. We've got about 10 points on the VIX. We've got 5 minutes while the FOMC actually starts. I actually wish I had a 1-day DTE to play. I'd actually probably play that instead of these 2-day DTEs right now, but the way things are working. But 0 DTE, I just can't do it. Too tight. All right, here we go, testing it again. QQQ still climbing. XLF starting to round over. Now there is, yeah. All right, XLU wicked out. Let's see. Double red on XLF. Right up to R3. And there's that rejection of R3 again. All right. I'm looking at it. %24 of some calls. Nice. XLF is still on the descent. Everything else is starting to have a little red here. Wicked up. Watching the volume. Small selling volume here. I wanted to see VIX come a little bit lower so I could anticipate some sort of a bounce there. But yeah, everyone's waiting. Yes, Uncle Terry, I'm on voice chat as well. Thanks, Johnny. Thanks for being here, buddy. Welcome. Look at that wick up. That's what I'm scared of. Not much volume here, not much movement. XLF is really the heaviest thing right now as the bonds are falling off now. Little green candle in XLF. There's a 15 minute, still very bullish on the 15. And the 1 hour chart, of course, has that. What's up, Eddie? How you doing, buddy? All right, so a little consolidation period right up here. 462.40 all-time highs conveniently. Right off R3. All right, is he coming out? All right, he's coming out. Hold on, let me get this started. Monetary policy goals that Congress has given us. Maximum Yeah, I'm trying to figure that out. I don't know why there's no sound, but all right, I think that worked. I know, Trev. I'm doing it for the afternoon. Man, look at that wick. Look at these wicks. Crazy stuff. All right, another bounce right off R3, QQQ. Starting to downtrend just slightly. XLF downtrend. Look at that, big red candles. Man. Man, look at that wick up. Big bottom wick right there. Dang. God, look at that. Oh, ho. Now it's getting some. Now it's getting spicy. Look at that. All right, so big wick up, right back to R3 again. Yeah, for some reason I can't get the FOMC to play the audio. I'm adjusting my settings in my mixer, just not working. So got the video up there, but yeah, use the link and watch it on your own accord. And R3 again. Wapa. Getting smacked down. Wapa. Did you just say wapa? 462.26. Big wicks. Shaking and baking. I'd like to take a call or to put it right at R3, but it keeps happening too quick. Rejecting them pretty quick. All right, here we go. Another test of R3. Another green candle. XLF is starting to bounce. All the X's are starting to climb just slightly. Man, look at that green candle. But dude, that's it. He's done. Uh-oh. Rate the question. Rate the question. A lot of top wicks here. Watching these candles. Man, look at these wicks. All right. Puts. I've got puts loaded up. Look at the tech. Look at the wicks on tech.
wages have been moving up strongly, very strongly. And in particular, I would point to the employment compensation index reading that we got last Friday. Now, in real terms, they had been running a little bit below inflation, so real wages were not really increasing. I think with the ECI reading, it becomes close to
Increasing selling volume here.
in terms of the real increase. So wages moving up, of course, is how standard of living increases over the years for generation upon generation. It's very important, and it's generally a good thing. The concern is a somewhat unusual case where if wages were to be rising persistently and materially above inflation and productivity gains, that could put upward pressure on or downward pressure on margins and cause companies to their employers really to raise prices as a result, and you can find yourself in what we used to call a wage price spiral. We don't have evidence of that yet. Productivity's been very high.
Oh, this guy's so full of it.
So we'll be watching this carefully, but I would say that at this point we don't see troubling increases in wages, and we don't expect those to emerge, but we'll be watching carefully.
Man, green candles across the board. Badoosh.
Perhaps give us your thinking about the trade-offs between inflation and unemployment. You talked about the shortfall in unemployment and reemployment relative before the pandemic.
Oh.
Inflation, which is affecting everybody. Are we ever close to a point where the risk of inflation is greater than the benefit that you for recovering these lost jobs?
Hey, there's 463, by the way.
Statement today says your key policy accommodated to hit that 2% inflation target. Our survey shows
I haven't bought anything, Umar.
5% inflation this year, 3.5% next year. It sure seems like it or moderately exceed that 2% target. Thanks.
Yeah, so I'm not sure I totally got your first question, but I would say, in fact, like if you just quickly, succinctly say your first question again.
Sure, the idea that the trade-off between inflation and unemployment, that we keep policy accommodative to put this 5 million folks, or find these 5 million jobs, and at the same time, all Americans will be suffering from higher inflation. Is that trade-off worth it, or is it better or smarter to raise rates right now to combat inflation and perhaps not lean so heavily on the employment side of the mandate?
Yeah, so this isn't the traditional Phillips curve situation where there's a direct trade-off, where that's really what we're talking about. The inflation that we're seeing is really not due to a tight labor market. It's due to filings, and it's due to shortages, and it's due to very strong demand meeting those. So
Why wouldn't this go to 470? Why wouldn't it? Sure, let's do it. Gas pedal. All right, right off on 4. Let's see how this next candle shakes out.
Statement on longer run goals, as you know, that says when those two things are in tension, what we do is we take into account employment and short.
Big old green candles blasting up to 463. Let's go to 467. Sure, let's do it. I think we're all getting senile now. 463.14 right off R4, and there we go.
The amount of the deviation, we have to think about the time it will take, and we have to make policy where the two goals are in tension. It's very difficult. But what it really boils down to is something that's common sense, and that is risk management. We have to be aware of the risks particularly now the risk of significantly higher inflation. We see shortages and
Big green candles, 463.21. That's a little dollar pop.
and we have to be in position to address that risk should it become really threat should create a threat of more persistent longer term inflation. And that's what we think our policy is doing now. It's putting us in a position to be able to address the range of plausible outcomes.
Thank you. Next we'll go to Colby Smith at the Financial Times.
Thank you.
Boom.
Economic conditions
All right, so
So I guess I said in my opening remarks, assuming the economy performs broadly as expected, the committee judges that similar reductions in the pace of net asset purchases will likely be appropriate each month, and we're prepared to deviate from that path if warranted by changes in the economic outlook. So I'm not going to give you a lot more detail on what that might be. Of course, if we do see something like that happening, if it becomes a question, then we'll communicate very transparently and openly about that. But I'm just going to leave it with the words that are in the statement. Sorry, was there a second part?
463.38 now, just freaking now, just going nuts, just buying up.
Just leave you with the words we have here. We are prepared to speed up or slow down the pace in asset purchases if it's warranted by changes in the economic outlook. And again, if we feel like something like that's happening, then we'll be very transparent. We wouldn't want to surprise markets. We'll say in light of this factor or these factors, we are considering doing this, and then we would either do it or not do it. But so
Did we hit $40 yet? I think we already hit $40. Let's see.
That's what Rachel Siegel of the Washington Post.
Nope, we got $3 more left for that.
Thank you so much for taking our questions. You mentioned at the beginning that the Fed understands the difficulties that high inflation poses for individuals and families, especially those with limited means. What is your message to those families or consumers that are struggling with higher prices right now? And do you feel that your expectations around transitory inflation is that message is reaching them? Thank you.
yeah, so first of all, it is our job to, and we accept responsibility and accountability for inflation in the medium term. We're accountable to Congress and to the American people for maximum employment and price stability. The level of inflation we have right now is not at all consistent with price stability. By the way, we're also not at maximum employment, as I mentioned. So I would want to assure people that we will use our tools as appropriate to get inflation under control. We don't think it's a good time to raise interest rates, though, because we want to see the labor market heal further. And we have very good reason to think that will happen as the delta
I'm just trying to listen to this. That's why when I talk, I'm trying to listen to what he's saying.
declines. So which it's doing now. But as I mentioned, so transitory is a word that people have had different understandings of. For some, it carries a sense of short-lived, and that's there's a real time component measured in months, or let's say. Really, for us, what transitory has meant is that if something is transitory, it will not leave behind it permanently or very persistently higher inflation. So that's why we took a step back from transitory. We said expected to be transitory.
Oh, another pop. 463.77. Can we get to 466? 466 will mark a $40 move in 1 month, or 10%.
That means different things to different people. And then we added some language to really explain more what we're talking about in paragraph 2 and paragraph 3. We said that supply and demand imbalances related to the pandemic and the reopening of the economy.
Nope, no positions yet.
Sizable price increases. Then we said progress on vaccinations and an easing of supply constraints are expected to support continued gains in economic activity and employment as well as.
I don't know. I got to go back and calculate R5, but yeah.
And also acknowledging more uncertainty about transitory. So it's become a word that's attractive.
And still climbing. There's no wicks here. It says climbing.
Our message, which we want to be as clear as possible. Ultimately, the only other thing I would say is, look, we understand completely that it's particularly people who are living paycheck to paycheck or seeing higher grocery costs, higher gasoline costs. When the winter comes, higher heating costs for their homes. We understand completely what they're going through, and we will use our tools over time to make sure that doesn't become a permanent feature of life. Really, that's one of our principal jobs, along with achieving maximum employment, and that's our commitment.
Thank you. We'll go to Chris Rugaber of the Associated Press.
Great. Thank you, Michelle. Thank you.
463.80, 86-ish.
You talked about getting back to full employment. And so could you update how you define that
Let's see what I got.
There was hints you might try to do something better than that. Now we can talk
My R4 from 11.1 is 464.37.
all the jobs back because of that and other trends. You did mention the finance
So I would use that.
folks. So can you give us some examples of things you're looking at specifically to measure full employment? Will you be looking at prime age employment population ratio, for example? And if so, do you need to see it get back to pre-COVID levels to achieve maximum employment, or is there something short of that that would work?
Man, I'm going to miss this market. This is insane.
We say broad-based and inclusive goal that's not directly measurable and changes over time due to various factors. You can't specify a specific goal. So it's taking into account quite a broad range of things. And of course, employment levels of employment, participation are part of that. But in addition, there are other measures of what's going on in the labor market. Like wages is a key measure of how tight the labor market is. The level of quits, the amount of job openings, the flows in and out of various states. So we look at so many different things, and you make an overall judgment. Now, the temptation at the beginning of the recovery was to look at the data in February of 2020 and say, well, that's the goal because we didn't know that's what we knew. We knew that was achievable.
464. We printed 464.05. Wow, it's still climbing. Wow.
Which is still COVID affected, by the way. A lot of what we're seeing in the last 90 days is because of Delta. We were on a path to a very different place. Delta put us on a different path, and we see these things. But so I think we're going to have to. Ideally, we would see further development of the labor market in a context where there isn't another COVID spike, and then we would be able to see, I think, a lot. We could see
Now, what this means, and I'll translate all this hot air that's coming out of his mouth right now. All the market is hearing right now is liquidity. There is still money. Buy it up, buy it up, buy it up. Big money is looking for returns on their money until they see. Look at it's still going higher, 464.14, and still until the liquidity is pulled in the market, this thing is going to go to 500. It's not going to stop. They're going to keep pumping their money into the market because they're going to continue to get the returns on their money. And here we go on up to 465, 4 to 500. Make it 600. Screw it. Call it 600. Whatever it is. So we're 120% higher, something like that. Whatever it is, 110% higher than where we were in March of 2020. An ETF. The market is 120% higher than we were in March 2020, and it continues to chug higher on fake liquidity. And it's going to continue to do that until the rug is pulled.
So it's a complicated situation, and I would say we hope to achieve significantly greater clarity about where this economy is going and what the characteristics of the post-pandemic economy are over the first half of next year.
Going on up. 464.08 and climbing.
Sorry, so the two tests.
The two tests in the statement we got in about 50% the upside tomorrow, 50% of the economy did that.
That's a decision for the committee. I would put it to you this way. But when we reach maximum employment, when we reach a state where labor market conditions are at maximum employment in the committee's judgment, it's very possible that the inflation test will already be met. We're aware that language sounds a little out of touch with what's going on, but we're not at maximum employment. When that is the case, we'll look to see whether the inflation test is met, and there's a good chance that it will be if you look at how inflation is.
Nice, Nanya.
So to follow up, so you're not willing to commit that the current levels of inflation and their persistence have met moderately and for some time.
Still climbing. There's no wicks on these things. They're just eating up the top.
What I'm really saying, that question is not before us right now. We were at the question of when to taper. We've now answered that question, the speed of it and all that. We have not focused on whether we need the liftoff test employment. What I'm saying is, given where inflation is and where it's projected to be, let's say we do meet the maximum employment test. Then the question of the committee at that time will be, has the inflation test been met? And I don't want to get
Nope, we probably will wake up to a gap up tomorrow. That's just the way it's working with the liquidity. Buy it up. Buy it up.
test. We're not evaluating the lift test. We didn't have that discussion at today's meeting. We did talk about the economy and the development of the economy, but we didn't ask ourselves whether the liftoff test,
Nice, Chris. Thanks for being here, buddy.
because it's clearly not met on the maximum employment side.
Thank you. Let's go to Matthew Bosler at Bloomberg.
Hi, Chair. Matthew Bosler with Bloomberg. So when you're looking at this question of assessing whether or not the U.S. economy is at maximum employment, do you have a framework for making that judgment that is independent of what inflation is doing? And if not, does it kind of complicate that assessment given all of the uncertainty about inflation right now and the inclination to believe that the high inflation we're seeing is not related to capacity utilization in the labor market? Thank you.
So we don't actually define maximum employment as we define it in terms of inflation, but of course there is a connection there. Maximum employment has to be a level that is consistent with stable prices. But that's not really how we think about it. We think about maximum employment as looking at a broad range of things. You can't just look at, unlike inflation, where you can have a number. But with maximum employment, you could be in a situation hypothetically where the unemployment rate is low, but there are many people who are out of the labor force and will come back in, and so you wouldn't really be at maximum employment because there's this group that isn't that's unemployed. So we look at a range of things, and so by many measures, we are in a very tight labor market. I mentioned quits and job openings and wages and things like many of them are signaling a tight labor market. But the issue is how persistent is that? Because you have people who are held out of the labor market, of their own. They're holding themselves out of the labor market because of caretaking needs or because of fear of COVID or for whatever reason they're staying out. And it's clear that there are tremendous demand for workers and wages moving up. It does seem like we're set up to go back to a higher job creation. So that would suggest that you're not at maximum employment. So at the end of the day, it is a judgment thing. But of
Wow.
course, it also has to be a level of employment that's consistent with price stability.
And if I could just follow up briefly, you talked a little bit about this possibility that the two goals might be in tension and how you would have to balance those two things. Could you talk a little bit about what the Fed's process for balancing those two goals would be in the event that, say, come next year, you decide there's a serious risk of persistent inflationary pressures despite ongoing employment shortfalls?
Yeah, I mean, again, it's the risk management.
All right. So at this point, he's just blowing hot air. Not interested in really listening anymore. So I'm going to mute this. He's not saying anything that's is going to be contributory to anything. So, boom. All right. Well, there you have it. Big old massive buy up after looking at R3 and blasted through the top. Kind of consolidating right under my R5, which was November 1st R4. And yeah, so there you go. There you go. Liquidity is the name of the game, and that is the status quo is no changed. So the Shrek out the top. Definitely a crazy year. I can't, it's funny because I don't know if anyone truly respects anybody who's been doing this for a number of years. Anybody who's been doing this for a number of years, like they have a good appreciation for what's happening in 2020, 2021. This insane buy it up. And I wasn't around in the .com area, so I don't know if this is, and I can go back and read about that. But I didn't live the .com crazy area, and I don't know if this is dissimilar to it. But me doing this for 10 years, it's hard to appreciate. It's hard for others to appreciate exactly what's going on here. And 2020, 2021, doing this crazy just buy up, buy up, buy up, $40 moves. SPY climbing only almost 10% in under a month is freaking ridiculous. It's beyond ridiculous, and it's because of this massive liquidity. So yeah, the natural thought is that, man, when is this actually going to come down and destroy everything? Because at what point does it stop? At what point does the music stop, the merry-go-round stops, and everyone has to get off? Like, at what point does that actually happen? It could be 2022, 23, 2024. Who knows? It's unprecedented times. I don't think anybody can say with a very high level of certainty what happens. Because if you were to go back to October of 2020 and say, hey, do you think a year from now we'll be at 464? I think every single person would say, nope, there's no way. Especially when you start talking about tapering. But here we are, 464. Awesome stuff. So, yeah, for those who've been around a while, it's appreciate this stuff. It's awesome because when the music does stop, we're going to go back to chop, and we'll be saying to our grandkids, hey, Grandpa OM, do you remember, did you trade in 2021? Yes, I did, grandson. And it was glorious. It was glorious. Now go buy, here, take this $100 bill, go buy me a gallon of milk. So yeah. Crazy stuff. Crazy stuff. 464.05. We're just under R5. Tesla. Apparently Tesla's doing something. Man, big old buy up there. Nvidia. Google, Facebook, Amazon, Apple. SPY is way on up there. I was around in the .com area. It was similar. Everyone's saying this time is different, but spoiler, it wasn't different. We didn't listen. We didn't listen. Now I'm 8-2 since joining. My account is up 14%. I appreciate everything. Nice, Winter Shadow. Nicely done. SPY is up 112% since COVID bottom. Yeah. Nutty movement. Will the fall be as drastic as the climb up? Who's to say? Who's to say? Here's $100 for some milk. That's right, Ben. That's right. Jason says, new followers, Discord subscriber, love the content. Thanks, Jason. Appreciate that. Let me know if you got any questions. Thanks for being here. So, yeah. No play for me. Nope. I was looking to take a play off R3, and then of course this stuff happened. And at that point, it's like, do you know what do you do? Like, what do you do there? You know, it's like, man, let it do its thing. I'll get my money. It's fine. So yeah. Any reason why the market is flying high? Liquidity. All JPOW came out and said without saying it is buy everything. You've got enough money until we start adjusting rates, which is not anytime soon. So he said, go ahead, continue to buy. That's all he said. And so that's what's happening. The market is eating it up. Your mortgages aren't going to start going up yet. Loans aren't going to start going up yet. The rate at which banks loan each other money is not going up yet. And all that means is liquidity. Yeah, see, the thing, for those who want to talk about, the top and stuff like that, is that you're not going to be able to climb the top. It's not going to be obvious. They're not going to come out and say, here, buy puts because this is what's going to happen. They're not going to buy that. So those who do happen to time it right, which are going to be very few and far between, they're going to make a killing. But it's not going to happen like that. We're going to wake up at 5 o'clock in the morning to the market being smashed by something other than another. One thing is going to cause it. So I would stop worrying about necessarily buying the top. That's why I don't hold positions overnight, because I like to play what I have in front of me, and I go from there. And when it does actually pop, so be it. Whatever. No big deal. Resistance. There you go, Chris. It's all about being smart, trading smart. I do adjust lump, and if you were here a few days ago, you saw that I was heavy on puts and immediately flipped to calls, and I got almost a 30% win. So I do flip. I'm able to adjust. I've been doing this a long time. For this particular instance, though, I don't trust this action above R3. It's just this crazy buy up FOMO action doesn't interest me. Doesn't interest me. Could I make a play? Sure. Yeah, doesn't interest me. So I'll sit my happy butt down and I'll wait for some nice good movement and go from there. There's always another day, always. I was changing the diaper, came back and almost went to cardiac arrest. I didn't take any positions, but congrats to those who did. That's right. That's right, Tristan. Yeah, crazy stuff. Hey, it's better than nothing, Jeff. Michael says I've been stopped holding overnight ever a while back and been sleeping better ever since. That's right. That's right. Hey, by the way, it's Power Hour or Powell Hour. Powell Hour. Say that a few times. We got 52 minutes until the market closes. John Moore is coming out there with a Newtonian analysis. We often see the equal and opposite reaction. How did you resist buying 0 DTE 462 calls at 1243? Because I like money. I like keeping my money. I almost burned the house down because I was watching the market instead of watching my chicken. Hey, don't forget that chicken. And look at that, new highs again, 464.25. Take care of y'all's Mentos and y'all's chicken. Is 0 DTE more volatile? Yes, it is. Significantly more volatile. All right, R5 right there. I gather that you like keeping your money more than making new money. That keeps you from FOMO buying after these massive candles. Trading defensively, that's right. There are times to turn up the offensiveness and the times to turn on defensiveness. And that, for me, defensive play. That's fine. All right, busting up through R2. This is just silly. That's the thing. When things do get silly, I usually take a step out. I exit stage left. I'm not sure, Andres. I'm not sure. And he asked if, do we think the market is going to open green tomorrow? Who knows? There you go, veteran. I like it. Nice. Sold your puts before all this madness. Yep. We got 49 minutes of the market closes. Let's see what happens. Did I post an R5? Yeah, I used November 1st's R4, which is 464.37. Yeah, I'll put that in the. There you go. Hey, Roddy Rod, it is your birthday. Everybody wish Roddy Rod a happy birthday. Happy birthday, Roddy Rod. Happy birthday to you. Everybody type it out since you can't. Everybody type out happy birthday since you can't sing it. I'm just kidding. Don't do that. I'll ban you. Happy birthday. Thanks for being here. How do you get all these levels? I calculate them. So yeah, I use my calculations to. Hold on a second. I'm looking at this. Oh yeah, so I basically use when we're not at our time levels, I use volume, price action, order flow to determine levels. Now I just use order flow because that's all you got. So red candle bought up. Thanks, Mr. Perfect. Appreciate that. Coming from you, that means a lot. How do you mentally deal with losing 75% of your portfolio over a couple of weeks? I stopped trading for a couple of days, at least. I mean, I lost 98% of my portfolio in 48 hours. And what I did is I shut it down. There's obviously something wrong. You've made a colossal mistake. You have to be honest with yourself. Take notes of why it did it. Shut it down. Leave. And don't touch a computer for a few weeks or days, at least. Figure out what's going on. Get your mind right. Come back in and start small. Now it's okay to have a pity party when you do something like that. Have a pity party for a few days. But don't be self-deprecating. But have a pity party. Do it. Pat yourself on the back. Say it's okay. Be okay. I'm terrible. Then get back on your horse. Learn what you did wrong and start trading again. Very small position sizes, small trades. Christian says, been a while since I've seen a full stream. Do you have a video about your R levels? Yeah, I do. If you go into my educational series and you look up the Dynamite Levels video, there you go. Thanks, Tristan. Yep. There's also a second one, the 106% win video, also goes into an in depth, but that's in the trade analysis section, not the educational. Yeah, quick cook shorts. Yep. Have I ever used Heiken Ashies? No, I don't. Heiken Ashies, from what I've researched, is not good for quick day trading. It's more of a trend data. So, yeah, I don't use Heiken Ashies. How come you pay such a premium just a day trade? What do you mean? Thoughts on Nvidia not reclaiming highs of the day from the rest of tech? That's just Nvidia. Individual stocks doing their thing. Thanks, Jules. Appreciate that. Yeah, so R5 is working nice after the rest of them worked pretty well. So if there is a win today, it's going to be the levels and going on to the future. The contracts I use are 3 to 5 days out. So today I'm doing the October 5th contracts, two-day DTEs. So yeah, the longer stuff the 1 week out stuff is too much. It's too long. It's not going to move a lot. They are going to be a little pricey right now. I'm looking at the October 5th, which are 2 days away. They're cheap enough and they move enough where they make me money, but they're long enough where if I'm wrong, I don't get killed. Red candle bought up. Nothing's coming down. $256 people watching. If you wouldn't mind, hit that like button for me. If you are new, you like what you see, hit that subscribe button too. Got a great community here that's built around learning, not necessarily copying trades. We all try to bounce ideas off each other, learn a little something along the way. Got a great how-to series coming out. If you are a newer options trader, you want to learn a little something about how to do this consistently and consecutively, and all the good stuff in between. I got the great series coming out here, fall in the wintertime, called the How-To series, and that's going to go over pretty much everything options basic related, anywhere from the basic stuff, how to pick an option, all the way up to some short strategies and everything in between. So instead of doing one long options trading video, I'd like to do a whole series, so you can just pick which one you want. Advanced trader can pick one, or the beginner trader can pick them all. Up to you. So be on the lookout for that. And that subscribe button will help you get notifications for that. All right, bouncing off R5, 464. You can also learn how to form these levels for yourself. These R and S levels work out pretty dang good. So, good stuff. I bought a 44 DTA put and I'm clapped. Thank you, Andre. Appreciate that. Yeah, it means clap your hands, I know what that means. I'm not stupid. I mean, come on. The green and red lines you see here. See these R levels there. There. Bam. Yeah, I'll mute everything else. So. Yeah, these lines right there that you see. Thanks, Paolo. Appreciate that. Never imagined that officials would trade stocks the way they did. Sure. Yeah, I think someone did. A couple people created a script to throw in the S&R levels, but you still have to put in the data, which is where I come in, or where you come in once you learn how to do it. Yeah, Peter, that's a great question. I might actually start dialing in a range like that. I would probably say anywhere from 12, 8 to 12 cents, somewhere in there. I would actually like to back test and see what the range is, the average range is around those levels. Yep, they're hand placed, PL. They're hand placed. Should go for a straddle. That's up to you. That's up to you. Thanks, Glenn. Appreciate that. Yeah, Bob Lablaw. Yeah, Bob Lablaw does usually. He did the script in TradingView, so we'll see if Bob Lablaw will share that for us, and we'll put the levels in there. Another big green candle. Booyah. All right, y'all. Well, I'm going to go ahead and call that a day. That is almost 2:30 Central, 3:30 Eastern. It's been a fun day, to say the least. Big green candles from the JPOW printer factory. And that should put a nice bow on things. Now we have the official taper news. Now the next news we need to be on the lookout for is the rate hike. When is that going to happen? I probably wouldn't even talk about that until early 2022, early to mid 2022. We'll see what happens. The consumer season should be pretty interesting with increasing prices, increasing wages, lack of labor shortage, not to mention the supply chain issues, debt ceiling to talk about. So it should be an interesting consumer season. We'll see how that starts affecting companies' bottom lines after a blowout consumer earnings season. We'll see how that goes into Q4. How does that affect Q4 earnings that we'll hear up in February 2nd, I think, is when they're announcing Q4 earnings. And then we'll start to talk about when's the rate going to happen. Then you'll start talking about mortgage rates. Then you'll start seeing the housing market start to come into play, and the whole thing will start on the path to where it's going to be headed. Until then, I wouldn't expect anything less than 500 throughout the time. So it's now November 3rd, Wednesday, 2:25 Central, 3:20 Eastern Time. Thank you all for being here. I appreciate it. If you want to join the Discord or the Patreon, the links are down there in the description of the video. Click on those, follow. I'm already getting a lot of people joining, so thank you all for the support. Thanks for being here. I appreciate the continued support and hopping on with us. And I will see you all bright and early tomorrow. If you're on YouTube, I will see you Friday bright and early. And tomorrow will be the voice stream for the Patreoners exclusive. Thank you all for being here. I appreciate it. Till tomorrow, I'm out.
Five-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns.